Talk Media Limited, where complex ideas are explained clearly. Hi, I'm TaxMax. Let's break down today's tax topic.
Fact: corporation tax is paid by UK companies on their profits. When people say amending a company tax return, they usually mean changing something that has already been submitted to HMRC. That could be a mistake in the numbers, a missing piece of information, or changing a claim the company made, for example a loss claim or a capital allowances claim. The key point is this: the tax system does allow changes after filing, but only under specific rules and time limits. Amendments happen for normal reasons. A mistake is spotted after submission. Estimated figures were used and later replaced with final numbers. Or the company wants to revise a claim once better information is available. So the system is designed to be workable, but it also has strict cutoffs, so returns cannot be changed forever. A company normally has a right to amend its own return after it has been filed. The time limit is important. The company has 12 months from the statutory filing deadline to amend. That deadline is based on when the return was due, not when it was actually filed. In many common situations, the filing deadline is 12 months after the end of the accounting period. So if a return is filed on time, the amendment window often runs to around 24 months after the accounting period ends. Within the amendment window, amendments can cover more than just typographical errors. They can include correcting figures in the computation, updating supporting documents, and adding, removing, or changing certain claims. Common examples include revising a loss relief claim or amending a capital allowances claim. There is not always a single official form for amendments. In practice, an amendment can often be made using commercial software via HMRC's online service or by correspondence, as long as HMRC receives the information it reasonably needs. As at September 2025, HMRC's online filing system supports up to 12 separate amendments. There are special rules for certain claim types. If the amendment relates to an R&D claim or certain creative sector tax relief claims, there can be specific form and content requirements. So while many amendments can be made informally, some claims are more structured and rule-heavy. A company can sometimes amend a return, even if HMRC has opened an inquiry. However, if the amendment affects the amount of tax payable, that change is only treated as effective when the inquiry is closed. This prevents the tax position constantly moving while HMRC is actively checking the return. Some amendments affect other companies, particularly in groups. If an amendment changes how group relief is allocated under a simplified group arrangement, a corresponding amendment may also be required in another group company's return. Sometimes the issue is not just incorrect figures, but the wrong accounting period. In that case, the amendment timing is judged by reference to what the filing deadline would have been if the correct accounting period had been used. You do not automatically get extra time just because the period was wrong. If an error is discovered after the amendment window has closed, the company may no longer be able to fix it by amending the return. At that point, the correct route depends on the nature of the error. HMRC should be notified promptly if tax may be underpaid, because penalties can apply if errors are not dealt with properly. If the company has overpaid tax, there may be routes to recover it, but these are narrower than a normal amendment. HMRC also has a power to correct obvious or minor errors. This usually covers things like arithmetic mistakes or transposition errors. As at September 2025, HMRC can make a correction up to 9 months after the return, claim, or amendment was filed. HMRC must give notice in writing. The company can reject the correction. If the company is still within its own amendment window, it can reject the correction by amending the return. If the amendment window has expired, the company can reject the correction by giving written notice within 3 months of the correction notice. If HMRC considers an issue more serious than an obvious mistake, it will usually open an inquiry or carry out a compliance check instead. Even where a company amends within the time limits, HMRC can continue checking until it is satisfied the return is complete and correct. So the system has two main moving parts. The company's right to amend, usually within 12 months after the filing deadline, and HMRC's power to correct obvious mistakes, usually within 9 months of filing. Once those windows close, changes become harder and more restricted. And this brings us back to the fact we opened with. Corporation tax is charged on company profits. So changing figures or claims in a return can directly change how much corporation tax is due. That is why amendment windows, correction notices, and inquiry rules matter. What's a tax lover's favorite dance? The deduction shuffle.
Educational content only, not advice. Rules can change. Thanks for watching. Clear explanations, one place, Talk Media.